Thanks for joining us, everyone, and thanks, Me.
Hi, Shane.
Hi, Me. Hope you're well. Just a quick one before we get started. Just wanted to thank everyone for filling out the surveys, those who did. We got great feedback and we really appreciate that. I guess, Me, when I'm thinking about what we should talk about this week, we could go through the Strait of Hormuz again, whether there's going to be a peace deal or not. We've been talking about that one forever. We could go through the budget, and that one's been done over and over. Capital gains tax, negative gearing, trust, blah, 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 and so on. All very important issues, but I kind of think, well, we've done them a lot. But there's a bigger issue out there on inflation and interest rates, bond yields, public debt. You look at the budget and the fastest growing big ticket item is public debt interest. So we're going to be raising more taxes to pay off the debt on past borrowings, for example. So at the core of this is a concern about inflation. Yeah, do we really have an inflation problem in Australia?
I would say yes. Today, we actually just got an update on April's inflation number in Australia. And while the headline number at 4.2% is a retract from 4.6% last month, it was purely driven by the fact that the government cut fuel excise, by 26 cents per litre this month. And also because some states in Australia have cut down on public transport costs. But
this is a free public
public transport in Melbourne.
And things.
But I was thinking, does it actually make a difference? Because, people in Melbourne don't pay for the tram anyway.
Well, when I
get on the tram in Melbourne, no one actually pays.
That's up and down Collins Street. You don't.
There are all these memes in Melbourne about how, it's the best day ever if you can avoid the tram ticket inspector.
That's terrible.
Anyway.
That's terrible that people would even do such a thing. Like, I would never do that.
Look at Shane. Anyway, regardless, all these government measures have meant that we've had a bit of a tick down in headline inflation to 4.2%. But think again, our target inflation number from the Reserve Bank is actually 2.5%. So that's still very far away from the target. And our core or trimmed mean inflation number actually accelerated a little bit to 3.4%. And we are forecasting that it will go up even higher, closer to 4% by the end of this quarter, around 3.8%. So, if you look at those those latest numbers, yes, we definitely do have an inflation problem. But I think your openings kind of made me think, is this inflation episode transitory? Which seems to be the evil words of the past few years. Yeah. And I have a feeling that higher inflation might actually be here to stay. At least it will definitely remain higher in the upcoming decade compared to the past 10 years. And there are a lot of different reasons for it. And the number one that we think of is definitely higher geopolitical risks. Higher geopolitical risks probably mean higher supply chain issues. We've talked about the Strait of Hormuz. Maybe the next time we probably would talk about the Strait of Taiwan with chip issues, for example. We don't know.
Malacca Strait.
We don't know what will happen, but there will be some issues and there might be more supply chain issues, and that just means higher inflation.
There's also an issue with geopolitical issues in that every country seems to be upping their defence spending, which means they have to spend more money on armaments, which is metal intensive, so it pushes upwards pressure on commodity prices. At the same time, we're trying to transition from dirty fuel to clean energy and so on, which also means more demand for things like nickel and copper. So you've got that underlying pressure occurring. But just back on the Australian inflation number, we hear a lot of talk in Australia about supply and demand or capacity constraints. And do you really think that's a problem?
What do you mean? Is there a problem that we have too much demand in Australia? Well, the Reserve Bank thinks so. From an economist's perspective, I thought that more demand is a good thing because that means that,
Well, it is, but the problem is if you've got the supply that could keep up with the demand. If it can't, then prices just go up. That's always the thing that surprises me. We were out once having lunch and you look around and beautiful sunshine in Sydney, of course, and lots of people out there having lunch.
Well, people can't have some fun, Shane.
You can have some fun, but you sort of don't get the impression that... So say if you listen to the common narrative in Australia, there's a lot of struggle. Everyone's struggling, and I've no doubt that many people are. But then, and it's evident in the consumer sentiment surveys, very depressed. And then when you look at consumer spending figures, and they're not that bad. People are still spending.
Yeah. it might actually, consumer spending, I think, might actually soften over the next coming months. We've started to see some early signs of that in other countries globally. As people have to spend a bit more on fuel, they might spend a bit less on other fun things. But I guess the thing in Australia is that we were starting from a rather strong base late last year. We've had a lot of boost in real wages growth on an average person. Obviously, again, like there are always people who are struggling, but an average person in Australia will getting quite a bit of real wages growth, tax cuts over the last few years. There might be more tax cuts over the coming years as well. So we were starting from a strong base. Everyone was getting jobs with low unemployment rates. So that means that even with some rate hikes that we've had so far, people might have started to cut back, but not too much, definitely not to say recessionary levels.
I mean, you've got this other problem that, 3.4 in Australia. I think America is, well, if you look at their core CPI, it's 2.8 or something.
Yeah, but so America has a few different ways to measure inflation, and the Fed's preferred measure is actually hovering around 3 at the moment.
Yeah. And then you've got Canada, which I think is around 2 for trim mean, and what are these, median as well, core median or something. UK was around 3, but it's sort of starting to slow down again.
But
And
UK already has these Brexit problems.
Yeah,
so-
they do. I mean, they shot themselves in the foot. I mean, the funny thing about the UK is that the guy who led the charge for Brexit is the guy who's now riding high in the polls to try and fix Nigel Farage. I mean, it's odd. They created this problem a decade ago in exiting the European Union. I mean, there might be people who disagree with this, but this has created supply side issues, I think, in the UK economy, and then relegated them to a situation which is a lot more inflation prone and has also led to elevated unemployment. But the guy who's riding high in the polls is the one who was at the front of the Brexit campaign.
Well, maybe they want higher inflation. I don't know.
I don't know. It's just,
What's wrong with the average voter in the UK? Anyway,
Too far
UK
away.
problem. We're too far away from this.
Well, I know what it is. It rains too much there, and that adversely affects them. But then you've got the other country. The other big block is the Europe, of course, and they've got core inflation down around 2, was it 2.2, 2.3. So on that comparison, Australia is at the relative higher end.
All central banks are now tipped to hike further this year. Even the Fed, 2 months ago, they were tipped to cut rates at the end of this year. Now, a full rate hike is already priced in. So it does seem like financial markets have now basically agreed that inflation will just take higher from here globally in most of the developed world, as well as emerging markets.
I guess the big question then is, I mean, on that front, I think you pointed out only a few months ago, the money market thought the Fed would cut rates this year. Now it's edging towards a hike. But the question is whether this is structural or cyclical. I mean, it could just be...
Is it transitory?
Is it transitory? And then you mentioned that geopolitical tensions.
Yeah, that's one of the big reasons why I think it would probably remain a little bit higher, a little bit elevated in the next coming years. There are other reasons for higher inflation as well, as you mentioned. Ultimately, it comes down to supply and demand. And one of the things that economists always mention is that we have more baby boomers right now.
Well, the baby boomers are retiring.
Yeah.
I mean, this might sound insulting because we got more millennials and Gen Z coming in, and they don't have the skills, and the baby boomers who have the skills, they're retiring. So you can make an argument that the workforce is going to be less productive.
Yeah. So less productive means that you can supply less to the economy, and less supply versus even if you have the same demand, that just means higher inflation.
You can end up with higher inflation. Now, the reason it's not insulting is because that theory arose at the flip side when the baby boomers entered the workforce in the late 60s, early 70s. Productivity suffered, and one of the reasons is because all these baby boomers came into the workforce and they didn't have the skills. I mean, they're just young people at the time, and when they retire, they've got the skills. But and so you saw this wave of people coming in who didn't have a lot of skill, and then it led to higher inflation. Maybe now we're going through a similar thing.
Another reason why people think that more baby boomers lead to higher inflation is that you have basically more of basically your average age in the economy is rising. So you have more older people among the population, and they are the consumers. So they need a lot more healthcare. They need a lot more social assistance. Meanwhile, the workforce to support them is not growing as fast, for example. So basically governments have to spend a lot more on these spending like healthcare, aged care, pensions, for example. That's again, more demand. That just means higher inflation, especially in services. And we've actually seen a bit of this in Australia a lot. The second biggest contributor to April's inflation in Australia was actually medical costs because of really big rises in private health premiums.
Yeah. What was the other one? There's clothing as well. Was there?
But that's a bit seasonal.
Or travel.
Yeah, travels. But that's all but that's a bit seasonal as well.
Yeah, that was Easter.
Yeah.
Easter.
But medical costs have been a bit of an issue in Australia. And again, given this aging demographics in the society, then that might actually continue to be an issue over the next coming years as well, which is why I'm a little bit pessimistic on the inflation outlook.
But I suppose to add to the structural thing, so you've got geopolitical risk issues, supply chain issues flowing from that, increased defence spending, more demand for metals and so on, ageing populations, more consumers, less skilled workforce, and then you could also add bigger government.
Yeah.
And more.
So that's all related.
It's all related, and more regulation. And
can you explain what bigger government is?
Well, I guess coming out of the 1970s was this rejection of big government. So people said, we've had enough of these people. Yeah, this is the history lesson that Deanna loves, and she's not here, but she can watch it afterwards. But we're coming out of the 70s, and people said, well, we've had enough of big government. And they turned to people like Reagan or Thatcher, or in Australia, they'd never admit it, but Hawke and Keating in Australia were effectively advocates for the supply side revolution, smaller government. And so there was an attempt to sort of contain the size of government, cut back government spending. Keating in 3 years in a row, I think, cut government spending in real terms. 3 years in a row, it went from something like 28% of GDP down to, I forget the number, 22%. It's quite a big reduction. And also there was a move on to deregulate and privatise, sell off government instrumentalities. And this all led to more competition in the economy and more effective, more productive economy, you could argue anyway. And so that also contributed to lower inflation, whereas now you could argue that's gone in reverse.
And I feel like this bigger government story is a little bit self-fulfilling as well. For example, when you have higher inflation, then that means the bond yields, which are basically the premiums you're getting out of buying a bond, is going up. And that means that governments have to spend more on interest expenses among their spending pie. Spending goes up as a result of that. And then they have to basically keep borrowing to fund that spending. And that leads to even bigger government. So it's a little bit self-fulfilling in that sense.
Well, it can be. It can also lead to more taxes.
Yeah,
we've got to raise this money from the capital gains tax and the negative gearing and the trusts and all those rich people. They've got to pay more tax to pay the interest on the debt. I mean, the thing that worries me a little bit is that if this is not brought under control, then future generations actually end up paying for it. It's not the rich baby boomers who end up paying for it. It's future generations.
Yeah. I think that's a very good point because, when people think government bonds, how does that even relate to you? But actually, you are paying the government debt that the previous generations generated. And now when the government spends, that means our later generations, our children basically, will have to pay for it. And it's also self-fulfilling in another way. So the bond markets, and this is especially relevant over the last 2 weeks, when they start to see governments accumulate more debt as a percentage of the economy size, as a percentage of GDP, they start to get a little bit freaked out about the ability of these governments to actually repay the debt. And then investors demand higher bond yields, aka higher interest costs on these. And that goes back to the self-fulfilling spiral that we just talked about.
I mean, technically, there's an equation. So government spending, G, equals T, tax revenue, or the issuance of bonds, call it B, or M, you can print money to pay for government spending. The problem with money printing is that it can cause inflation. Inflation. So basically you're down to either if you want to increase spending on the NDIS or defence or anything, you either have to raise taxes or you have to issue government bonds. So if you raise taxes, then the current generation pays for it. If you raise government bonds, people down the track will pay for it eventually. And that's, I guess, a problem that if you look at public debt, it sort of peaked in the 1940s, I think.
Okay.
Well,
that's before any of us here.
Yeah, I know, but I can remember it. Back in the 1940s, public debt was very, very high as a share of GDP.
Was that because of the war?
The war. So they were funding war, basically. And then we had the strong growth in the post-war period, and so GDP went up. and the value of that debt was paid down or it fell relative to the size of the economy. And then it sort of, like in Australia, we got to a point where we had close to zero net public debt in the late 2000s, just prior to the GFC.
People will say that was only because the government was selling off government entities.
Well, that was part of it. We did sell off government entities. That's true, but we were also raising a lot of money because of the mining boom at the time. So there was massive revenue coming in. In fact, there was so much revenue coming in that I think every year for about 10 years, Australians got a tax cut. But now those public debt ratios are sort of trending back up again. They're not as bad in Australia, but like our public debt to GDP ratio is about half or less than half what it is in the OECD average. That's like a comparison of similar.
It's around 30-something% in Australia.
Yeah, and in the US it's about 120%, 110, 100%.
Yeah.
It's and in across the OECD it's about 95 or something like that. So we're not too bad, but it's a lot higher than it used to be. I mean, the problem with all that is that on the one hand people say, well, it's been rising for the last 10 years now, 20 years. Nothing's gone wrong, so there's not a problem.
But as we've mentioned, it's quite self-fulfilling. So I guess the fear here is that once it gets to this point, it would just keep going up and it will never go back down again. Because what's the factor that would help government debt to go down from here? Do you think there are any? It seems a bit like negative to me. Like, it seems a bit scary to me.
Yeah, well, several things can bring it back down. So we get this miracle economic growth. So the AI revolution happens and suddenly the size of the economy goes through the roof such that the level of public debt looks really small. But the problem with the AI thing, and this is a separate issue, is that it's, on the one hand, it could be extremely positive. On the other hand, there's darker scenarios around AI. You know, watch the AI doc, that new documentary that's come out. That we all lose our jobs. That just ends up with 7 trillionaires holding all the wealth, all that sort of stuff. That's probably too negative, I think, but we'll do AI on another issue of this. Yeah. But I mean, that's the sort of like a rerun of the 1950s where the economy expands dramatically, so the level of public debt shrinks relative to the economy.
So that's the positive scenario number one.
But let's put that one aside. The other way it could happen is governments suddenly get rational and say, well, we've got to try and balance the books. But I reckon that's kind of unlikely.
It is unlikely.
Unless there's some pressure on them, and that pressure would probably come via a scare on inflation and much higher bond yields.
It is unlikely also because of the same reasons as that we have mentioned, because even if they don't do anything, the aging population, the rising trend in geopolitical risks basically force them to spend more on those things. So they have to cut on other things.
It probably does. But it still does beg the question of sustainability. I mean, it hasn't gone wrong in the last 20 years, so therefore I don't want to get too negative here. But there obviously is that tail risk where maybe, investors lose faith that debt will be brought under control. Bond yields keep rising as people demand a higher risk premium to cover the risk that there could be a default on this debt. And then it becomes, as you say, a little bit self-fulfilling. It goes in a bit of a cycle that you end up having to borrow more money to pay interest on past debt.
I mean, okay, this is very scary to me, I think it sounds. But what does this mean for investors? Do you think that, this means that we should stop buying bonds, go buy gold instead?
I don't think so. Okay. Do you think? Well, two questions. That do I think we should stop buying bonds? No, I don't think we should, because I don't think governments in developed countries are going to default. This is not South America, and even they've learned from that experience. But there is a risk there. There is that tail risk that something might go wrong, and if we need to be worried about it. I guess the other argument is if you do have that tail risk, then that's the argument to have a little bit of gold or maybe a little Bitcoin in your portfolio.
And I also think that it just means that, shares might become a bit more attractive relative to bonds, even if you still buy bonds.
Well, shares in some ways can be more attractive is because shares offer some protection. If the economic environment turns out okay, and even if there's a bit more inflation, then shares might still be okay. The way shares could come under pressure is if bond yields keep rising and then you get a negative valuation effect. The equity risk premium goes negative at some point, and the investors say, well, I'm not getting a high enough return on my shares relative to bonds.
Uh-oh.
Then it's not so good.
Oh, what happened to Shane the optimist?
Well, Shane is still optimistic. I mean, I think it's very important to be optimistic.
Okay.
But we're talking about these risks around inflation.
Yeah, I think the conclusion for me is that, yes, I think the risk tilts towards higher inflation, not lower, I think, over the coming years. Ultimately, overall, I think that inflation would tilt towards the upside rather than downside over the coming years.
Yeah, this is the counter argument is, but it's not a very positive one either. So a central bank, say if the world has become more inflation prone because of increased geopolitical tension, supply chain disruptions, bigger government, more regulation, aging population, all this sort of stuff. So you get more, therefore it's harder for central banks to get inflation back down again. So therefore the inflation growth trade-off deteriorates. And so they do get inflation back to 2% or 2.5%. They manage to keep it there, but we end up with weaker economic growth.
So this seems another self-fulfilling
Well, that's another
thing.
negative scenario.
Oh, scary. Can we actually leave our listeners with something optimistic about all these?
Well, I think the optimistic one is quite simple. You know, if you're looking for optimism, it's AI. AI is arguably going to give us a huge revolution in terms of productivity. So yes, you've got these negatives from geopolitical tensions, protectionism, all this sort of stuff. The other things we're just running through, they're all negative. But on the flip side, I mean, I always think there's two big positives. One is the rise of Asia, which still has a long, long way to go. The other one is AI, which has the potential to significantly boost productivity and offset the inflationary consequences that flow from all those negatives.
I think
that's why I find it hard to get too negative here.
It's true. I think for those two reasons, Australia actually has extra reasons to be optimistic about that as well. Because number one, our biggest trading partners are all Asian countries. So those would be rising countries, including China, India, but also Taiwan, Korea, and Japan. They all need a lot of our resources, even in this, upcoming clean energy transition or AI transition. And in terms of AI, Australia has a lot of advantage as well because we do have a lot of independence in several energy sources. So that's not just old sources like gas or coal, but those are things like solar as well. And we have a lot of land. So I think that's quite positive for Australia if we want to have more data centers here, for example, or have energy to run those data centers.
Even rare earths. Or critical minerals. So my understanding is that there's critical minerals, which includes things like nickel and
cobalt, rare earths.
But then the rare earths are those rarer things. But most of them...
They're actually not rare. They're hard to extract.
They're hard to extract. Now,
yeah, so Australia has all of those resources.
Has most of them. It's just a question of extracting them.
Yeah.
Yeah.
So yeah, I think like if you're a listener in Australia, it's good to be aware of the risks over the coming years, but it's not good to be overly pessimistic either.
That's right. So I think there's three reasons to be optimistic. I mean, we can do all the pondering we want around these sorts of issues, but if you think about those three, the first one is, if you're not optimistic, there's no point being an investor. You won't believe that the bank will look after your bank deposit. You won't believe you'll get rent on the property you own. You won't believe that the company or the shares you have will pay dividends or grow their profits. So there's no point. Secondly, history is on the side of optimists. There's a book called The Triumph of the Optimists. When you look at share markets, yes, you have these setbacks and the pessimists look like heroes, like in the 1930s or the mid-70s when the Brady Bunch was canned, or after the 87 crash or the GFC. The pessimists always look like the winners when that happens. But that's not the normal story. The normal story is a gradual, slow, boring, rising trend in shares, generating much higher returns than you get from having bank deposits.
They're just not as sensationalist as those
headlines. It's not
as
sensationalist. I mean, it's far better to have a headline that says billions wiped off the share market than, the share market rose 0.2% today. I mean, deadly boring. No one's going to click on that story. But when it says 80 billion wiped off the share market, guaranteed you'll get clicks. And then finally, this is the mechanics of the way the share market works. It's 50-50. You know, you love updating this chart. 50-50 as to whether you'll get good news out of the share market today or bad news, i.e. whether it went up or down.
Yeah, daily returns.
If you go out to a 1 year horizon, you go back through time, back to 1900, 80% of the years in Australia has seen positive returns in Australia. So 8 years out of 10 have positive returns, 7 years out of 10 in the US. So if you're a pessimist waiting for every 2 or 3 years out of 10 when you're going to be right, you'll be wrong 70 to 80% of the time. So again, it makes sense to be an optimist as an investor.
Oh, I love that. I think we probably should end it there. And this is a great reminder for consumer sentiment surveys in Australia, even though it's showing that most Australians, there are more pessimists here than optimists. But as an investor, it's always better to be an optimist.
Yes, baby boomers were always happy. After World War II, we were celebrating out in the sun. But I get the bit about housing affordability, but that's another issue altogether.
Yeah. But for our listeners, let's be optimists.
Yeah, let's be happy.